Hello and welcome back to Boni's Life, your go-to channel for navigating the exciting and ever-evolving world of cryptocurrency. This November, the crypto market is a fascinating mix of opportunity and caution. We're seeing some incredible innovations and potential for profit, but also some significant risks to be aware of. In today's episode, we're going to do a deep dive into the most promising opportunities for November 2025. We'll be covering everything from airdrops and liquidity pools to staking and mining. We'll also be hearing from some of the most respected voices in the industry to get their take on the current market. So, whether you're a seasoned trader or just starting your crypto journey, you're in the right place. Let's get started. First up, let's talk about airdrops. For those of you who are new to the crypto space, an airdrop is essentially a free giveaway of tokens or coins from a new project. It's a marketing strategy to generate buzz and build a community around a new cryptocurrency. And in November 2025, there are some very exciting airdrops on the horizon. One of the most anticipated airdrops is from MetaMask, the popular Ethereum wallet. If you've been in the crypto space for a while, you've probably used MetaMask. It's one of the oldest and most trusted wallets out there. And after years of speculation, the CEO of Consensus, Joseph Lubin, has confirmed that a MetaMask token with the ticker MASK is coming soon. This is a big deal, and it's likely to be one of the biggest airdrops of the year. So, how can you position yourself to receive this airdrop? Well, the exact details haven't been released yet, but based on past airdrops, we can make some educated guesses. The key is to be an active user of the MetaMask wallet. This means using its built-in features like swapping tokens, trading perpetuals, and bridging assets. MetaMask has also recently launched its own stablecoin, MUSD, so using that could also increase your chances. The more you interact with the MetaMask ecosystem, the more likely you are to be rewarded. Another airdrop to watch out for is from Base, the Ethereum Layer 2 network incubated by Coinbase. Base has been a huge success, consistently ranking as one of the top L2s by total value locked. And now the creator of Base, Jesse Pollak, has announced that they are exploring a Base network token. This is another airdrop that could be massive, given the size and popularity of the Base network. To improve your chances of receiving the Base airdrop, you should be an active user of the Base network. This means interacting with the decentralized applications or dApps that are built on Base. Some of the most popular dApps on Base include Aerodrome and Clanker. You can also use non-native dApps like Aave and Uniswap on the Base network. And if you're feeling adventurous, you can even mint a Base domain name. Now, let's talk about a new trend in the airdrop space, perpetual DEXs. These are decentralized exchanges that allow you to trade perpetual contracts, which are a type of derivative. And in late 2025, we've seen a boom in airdrops from these platforms. One of the most successful examples is Asta, a perpetuals DEX backed by YZ Labs, the family office of Changpeng Zhao, the co-founder of Binance. Asta has been a huge success, and it's already airdropped a significant portion of its tokens to its users. The reason why these perpetual DEX airdrops are so popular is because they can be very lucrative. These platforms have high profit margins, and they're willing to share a portion of those profits with their users in the form of airdrops. However, I have to give you a word of caution here. Trading perpetuals is a high-risk activity, and it's not for everyone. If you're not an experienced trader, you could lose a lot of money, so please do your own research and be careful. So, to sum up the airdrop section, there are some great opportunities to get some free crypto in November 2025. But you need to be strategic about it. You need to be an active user of the platforms that are likely to airdrop tokens. And you need to be aware of the risks involved. And remember, there are no guarantees in the crypto world. But if you're smart about it, you could be well rewarded for your efforts. Now, let's move on to our next topic, liquidity pools. This is where things get a little more technical, but don't worry, I'll break it down for you. In the world of decentralized finance or DeFi, liquidity pools are essentially pools of tokens that are locked in a smart contract. These pools are used to facilitate trading on decentralized exchanges or DEXs. When you provide liquidity to a pool, you're essentially becoming a market maker. You're providing the assets that other people can trade against. And in return for providing this service, you earn a share of the trading fees. It's a bit like being a shareholder in a small automated currency exchange. You put up the capital and you get a cut of the profits. The beauty of it is that it's all automated. There are no middlemen, no bankers, no brokers. It's just you, the smart contract, and the other liquidity providers. But, and this is a big but, it's not without its risks. The main risk you need to be aware of is something called impermanent loss. This is a complex topic, but in simple terms, it's the risk that the value of your deposited assets will go down compared to if you had just held them in your wallet. It's a risk that you need to understand before you dive into liquidity providing. Now that we've got the basics out of the way, let's look at some of the best liquidity pool opportunities for November 2025. According to a recent report from Coin Bureau, one of the best platforms for providing liquidity is Pendle Finance. Pendle is a yield tokenization protocol, which is a fancy way of saying that it allows you to separate the yield from the underlying asset. This allows you to do some very interesting things like speculate on the future yield of an asset or lock in a fixed yield for a certain period of time. The APYs on Pendle can be very high, ranging from 10% to over 600% on some of the more exotic pools. But again, with high rewards comes high risk, so you need to be careful. Another great option for providing liquidity is Uniswap, the largest decentralized exchange on Ethereum. Uniswap is a household name in the DeFi space, and for good reason. It's a very user-friendly platform, and it has a huge amount of liquidity. The APYs on Uniswap are not as high as on some of the newer platforms, but they're still very respectable. And because Uniswap is so well established, it's generally considered to be a safer option than some of the newer, more experimental platforms. So, what do the experts have to say about liquidity pools? Well, they're generally very bullish on the long-term potential of DeFi and liquidity providing, but they also caution that it's a very risky space. Here's what Nick Pukrin, the co-founder of Coin Bureau, had to say in a recent interview. Liquidity providing can be a great way to earn passive income on your crypto assets, but you need to be aware of the risks involved. Impermanent loss is a real risk, and you can lose money if you're not careful. So, my advice is to start small, do your own research, and only invest what you can afford to lose. And that's some very sound advice. Liquidity providing can be a great way to earn a return on your crypto, but it's not a get-rich-quick scheme. You need to be patient, you need to be disciplined, and you need to be prepared for the risks. But if you're willing to put in the work, it can be a very rewarding experience. All right, let's dive into staking. If providing liquidity is like being a shareholder in a currency exchange, then staking is more like putting your money in a high-yield savings account. When you stake your crypto, you're actively participating in the security and operations of a blockchain network. You lock up your coins to help validate transactions and create new blocks. In return for your service, the network rewards you with more coins. It's a fantastic way to earn passive income, and it's generally considered to be less risky than providing liquidity. The world of staking has become incredibly sophisticated. It's not just about locking up your coins anymore. We now have liquid staking, where you receive a tokenized version of your staked assets that you can use in other DeFi protocols. And then there's restaking, a new frontier being pioneered by platforms like Eigen Layer, where you can secure multiple networks at once with the same staked capital, potentially multiplying your rewards. It's a bit like earning interest on your interest, but for securing blockchain networks. Of course, it also multiplies the risk, as a penalty or slashing on one network could affect your entire staked amount. So, where are the best staking opportunities this November? For Ethereum holders, the options are plentiful. Lido remains the king of liquid staking with a massive $38 billion in total value locked. It's the set and forget option, offering an APY of around 2.5% to 5% with top-tier liquidity. For those who prioritize decentralization, Rocket Pool is an excellent choice. It's a more permissionless protocol with a strong community offering a respectable APY of around 2.5%. But the real excitement in the staking world is around restaking. Eigen Layer has taken the crypto world by storm, and for good reason. It allows you to take your staked Ether and use it to secure other networks called actively validated services, or AVSs. This can significantly boost your yield, with APYs ranging from 1% to 8% on top of your base staking rewards. And platforms like Ether.fi have made this process even easier with liquid restaking tokens, or LRTs. They handle the complexities of restaking for you, offering a simple way to get a boosted yield of around 3% to 5.5%. And it's not just about Ethereum. For Solana enthusiasts, Lido is the go-to platform for liquid staking. It offers a unique feature called MEV boosted yields, which can significantly increase your returns. The APY on Jito is currently around 5% to 8%. And for the Bitcoin maximalists out there, a new platform called Babylon is making waves. It allows you to stake your Bitcoin in a self-custodial way to secure other proof-of-stake networks. The yields are lower, around 0.2% to 0.5%, but it's a fascinating new use case for the king of crypto. The experts are incredibly excited about the future of staking, particularly restaking. In their latest analysis, the team at Coin Bureau called restaking a paradigm shift in how we think about blockchain security. They noted that while it introduces new risks, the potential for increased capital efficiency and higher yields is a game changer. However, they also warned that the space is still very new and that investors should be cautious. As with anything in crypto, the higher the reward, the higher the risk. So, what's the bottom line on staking? It's a powerful way to earn passive income on your crypto assets, and the opportunities are only growing. Whether you're a conservative investor who just wants to earn a steady yield on your Ether, or a more adventurous degen who wants to explore the wild frontier of restaking, there's something for everyone. Just remember to do your own research, understand the risks, and never invest more than you can afford to lose. Last but not least, let's talk about mining. For many people, mining is the original way to get into cryptocurrency. It's the process of using powerful computers to solve complex mathematical problems, and in return, you get rewarded with new coins. It's the backbone of the Bitcoin network, and it's still a very important part of the crypto ecosystem. But let's be honest, mining has gotten a lot harder over the years. The days of mining Bitcoin on your home computer are long gone. Now you need specialized hardware called ASICs, and you need access to cheap electricity to be profitable. The Bitcoin network's hash rate and difficulty are at all-time highs, which means you need more and more computing power to mine a single block. It's a very competitive space, and it's dominated by large industrial-scale mining operations. So, is it still possible for the little guy to get into mining? Well, it's tough, but it's not impossible. One option is to join a mining pool, where you combine your computing power with other miners to increase your chances of finding a block. Another option is to look at mining altcoins, which are cryptocurrencies other than Bitcoin. Some altcoins are still mineable with GPUs, which are more accessible than ASICs. And then there's cloud mining, where you rent mining hardware from a company and they do all the work for you. But you have to be very careful with cloud mining, as there are a lot of scams out there. So, what are the experts saying about mining in November 2025? Well, they're seeing a lot of the same trends that we are. The hash rate and difficulty are at record highs, and it's getting harder and harder to be profitable. Here's a quote from the latest hash rate index report. At $44 per PH/s/day, hash price is close to or at break-even for many miners, depending on operating cost and machine model type. That means that if you're not careful about your costs, you could end up losing money. But it's not all doom and gloom. The report also notes that new, more efficient ASIC miners are constantly coming online, which is helping to drive down costs. And there are still opportunities to be profitable, especially if you have access to cheap electricity. And the big players are still making a lot of money. In fact, Microsoft recently signed a $9.7 billion deal with a Bitcoin miner called Eigen. So there's still a lot of money to be made in the mining space, but it's not for the faint of heart. So what's the takeaway here? Mining is still a viable way to get into cryptocurrency, but it's not as easy as it used to be. You need to do your homework, you need to be smart about your costs, and you need to be prepared for the competition. But if you're up for the challenge, it can be a very rewarding experience. And who knows, you might just be the next person to mine a block of Bitcoin. And that brings us to the end of our deep dive into the crypto opportunities for November 2025. We've covered a lot of ground today, from the exciting world of airdrops to the complexities of liquidity providing staking and mining. The crypto market is constantly evolving, and it's more important than ever to stay informed and educated. I want to leave you with a final thought from Fazam Esani, the CEO of VALR. He said, "This is a market in digestion. Structural bulls remain present, but short-term conviction is low and the price needs fresh, reliable spot demand." And I think that perfectly sums up the current state of the market. There's a lot of potential for growth, but there's also a lot of uncertainty. So be smart, be safe, and always do your own research. And thank you for joining me on Boni's Life. If you found this video helpful, please give it a thumbs up, subscribe to the channel, and hit that notification bell so you don't miss our next episode. And as always, I'd love to hear your thoughts in the comments below. What are you most excited about in the crypto space right now? Let me know. Until next time, stay curious and stay informed.